Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily quick stock market analysis show where we are looking at technical charts and trying to understand what happened in the market during the day and plan for a better trading date for the upcoming next day. That's November 30th, Thursday, 2023. So we had a bullish day on both the indices after a very long time. Let's see the charts. We have a wrap up here. We'll come back here. Let's first get into the charts and see what exactly happened. So this is the Nifty charts that you're seeing there. Look at the candlestick. It's a gap up and a wide range bullish candle. And here you have the Banknifty. Look at that. It's a nearly 700 point wide range bullish candle breaking out. So it is a breakout day, no doubt about that. Remember, it has been consolidating at this particular box zone that's in a very tight range of between 700, 100, 200, 150, 200 points for a very long time, and finally this has broken out of that trendline channel yesterday itself, but today it further confirmed that by breaking out towards the next zone that is heading high, and it took out the 20,000 big rounding number, basically it reclaimed that after 2 months and went further up to claim 20,090, 100 also, and just managed to close below that only. But we have a resistance right there, which is a gap resistance of 20,116. That's where we are. After that, we have the all-time high, so that's just 100 points away, or hardly 120 points away to the next new all-time high. That is where the Nifty all the time. It's like a magic. It's a big breakout, very long consolidation that was happening, and it all happened because Banknifty also joined the party. And downside Nifty, if you see, you have the first supports that could come in the gap that has formed today, that is at 9900 nearby zones, and then 9800, 700, 600, 500. 500 has got a gap also. So all the exponential moving average, everything is clear, and the bands are expanding on the upside. Bollinger Bands, if you see, right, the Bollinger Bands are expanding on the upside. Similarly, on the Banknifty, if you see, it's a big breakout. This consolidation was even more. It is a 14-day consolidation and broke out just like that today with a very wide. That is the reason why the market took away the 20k just like that, and also cleared the resistance at 44,400 levels, the previous new high also. Now it just has to clear one more. That's a 45k, and then before that 44,600 and 800 zone is the resistance of previous swing high. That is cleared, means technically price action by the previous swing high or lower high would be taken out, and then 45k also is cleared, means a confirmation. Then it still has a long way of another 1,400, 500 points to get the all-time high. But if 700 points rally is not a big deal for Banknifty, that wouldn't take more than a week to reach there. But the next hurdle for Banknifty would be that have a clear green close above this channel top, and also taking out the interim resistances, including 45 rounding number. That's what on the upside resistances. Downside, it would find good support at 44k. That is a big rounding number, and then after that 43,600 would be good support, and that's 20 exponential moving average supports comes. 200 exponential moving average will come in at 43,300. So solid supports down there. Now all the moving average resistances are taken out, and then all the hurdle of the channel breakout is there up, and the rounding number 45k, right? The big breakout. So this is what happens when the Banknifty joins a party. Things become so easy. That is what we were worrying. Banknifty is not doing. Nifty is solid, but Banknifty is lagging. It was lagging for 14 days, and all of that is taken out one single day, right? So just coming in, Bollinger Bands are also expanding now. Momentum has picked up. It is in the bullish zones on both indices on the short-term time frame, and trend indicator is crossed over to the bullish zones and rising up on the shorter time frame with the ADX indicator. So trend and momentum is the bull zones in the short term, price actions in bull zones on both indices more or less, except little more has to be cleared with respect to the Banknifty. Otherwise it's a big breakout day, right? So it's 1% on Banknifty up and 1.5% on Bank, 1% on Nifty and 1.5% on Banknifty up. Big rounding number 20K taken out just like that, both forming wide range bullish candle. And Banknifty actually was consolidating for 14 days even more than Nifty. So it's a gap up and trending up move that was happening in intraday. If you look at the intraday shorter time frames, it is non-stop up move, right? This is what you call a rally. This is what the option buyers might have been waiting forever, right? They might have made good money in the option buying, by just trading. It is absolutely not even too much volatile. Both indices you could have easily made money. And tomorrow we have the Nifty expiry and the Bank Nifty expiry. The monthly expiries are culminating tomorrow, and you have the evening after the market, the election results also coming out. Now the interesting thing here is that the India VIX has shot up another 4.5% today, yesterday to 7.5%. So it's 10-15% of up move that is happening since a week when the market has moved more than 1%. It should ideally, that's a divergence, which is obviously rising up because of the fear factor, the election outcomes, obviously. But when the market is rising up normally the VIX is supposed to also cool off a little bit, but that has not happened, and instead it has spiked up above the 12.7 towards the 13 zone. So that is something, probably thing that need to be cautious about. Now the actual buying that has happened from the Fyers has not come out till, but definitely it must have been good buying. Yes, look at this, not good buy, but it's a positive green day. Good buying has happened from the DIs. So who moved the market today? It was the domestic institutions who are banking on the election outcomes, is what we could understand. FIs did buy, but very less. At least they didn't sell. So it's a green day because of the domestic institutions buying that. But for the last 2 weeks, net to net, if you see, the FIs have been buyers in the cash market after 17 weeks or 18 weeks of continuous selling. That's a good positive thing. And resistance levels for the Nifty we had seen already. 20,115 has got a gap, and 20,222 is the all-time high, and then rounding number at 22,300, 2,300, and 44,800 is a resistance, 44,900 is resistance, and 45K is a resistance upside. Downside 44K and 43,600, 43,600 and 43K are supports and downside. So momentum is bullish, trend is bullish. VIX is the worry that you have to be slightly cautious because of the election outcome. VIX is spiked up unusually, and market has also moved up. Bollinger Bands is bullish. Technically, so absolutely, it's bullishness all over there. Right, with respect to the momentum, with respect to the price action, with respect to the Bollinger Bands and all that. Movement in the sectors, it was absolute green, and all sectors are moved up. Right, momentum is picked up, except the FMCG. All of the sectors now in the bull zones of the short term. And TCS, ICICI, HDFC Bank, all of them are moved more than 1%. It's big breakout. So reality didn't do well, except that all the sectors are close green today. Coming to open interest for the monthly expiry tomorrow, monthly expiry can be initially volatile, so be cautious about that. And especially you have an election result that is coming out on the same day after market, so you have to be extremely cautious how the market digests and how it plays around. Put call ratio is otherwise bullish above 1, and open interest is also bullish. The range is shown is 20,000 and 20,200 for Nifty, and 43K and 45K for the Bank Nifty. So these indices of green, cool is cooling off, and another thing to make a note is that gold is spiking up initially, right? It's getting to the all-time high levels when the time market is moving up. So yeah, slight cautiousness. Why is the gold spiking? So is it that there is a shift of money that is anticipated from big players, or is it just the war effect, or just precious metal is moving just like that? So you have to be slightly cautious about that fact. But otherwise, global cues are not that bad. US index has been steadily green for a long time. So that's the reason we have also started this reversal and now heading towards the all-time high. So momentum investing can still be done, but not value investing at this time when the market is very close to the all-time highs. Traders still has to be cautious because of the fact that the VIX is spiking up and there is an election outcome and all that. But overall, charts are having a direction right now for the traders, like positional or intraday. Right, there is a direction. So the levels and probabilities from the open interest in the charts are very clear. So that's all I have. The market view is bullish, absolutely, but you have to be slightly cautious about major event that is there on, right? So manage your risk. That's all that's in our hands, and keep ready a trading plan with respect to the probabilities levels that we also studied. So happy trading, happy learning, happy investing. If you're not subscribed, please subscribe and share to your friends and colleagues. Thanks. Bye bye.